Hey there. I'm sure we've all noticed our grocery bills getting a little intense lately.
Yeah, it definitely makes you wonder who's coming out on top in this whole grocery game, right?
Oh,
It's
exactly.
a fascinating landscape,
Mhm.
especially now,
Yeah.
even with inflation starting to ease up a bit, certain players are making some really strategic moves.
Well, today we're diving deep into how Walmart is absolutely dominating the grocery scene. And we're also going to explore the lasting impact of Trump's America First policies on the global economy, and most importantly, how that trickles down to you.
We have quite a mix of sources for this deep dive.
Yeah. Yeah.
We've got an academic paper that digs into the impact of America First on global trade, with a particular focus on developing countries like Sri Lanka.
Okay.
We'll also be looking at a business analysis article that breaks down Walmart's grocery dominance. And to top it off, we've got a CNBC interview with former Walmart CEO Bill Simon, where he gives his take on their Q4 2025 earnings and future outlook. Plus, we've got the actual transcript and press release from that earnings call to round things out.
I have to admit, when I first saw this lineup, I wasn't sure how these topics connected, but the more I dug in, the more I realized just how intertwined they really are.
It's the beauty of these deep dives, isn't it? You start with what seems like separate ideas, and then you discover these fascinating connections.
So to kick things off, let's talk about Walmart. I was absolutely floored when I learned that they now control over 25% of all U.S. grocery spending. That's a quarter of all the food we buy.
That's a staggering statistic, and it really highlights the sheer scale of Walmart's influence.
Mhm.
It's not just about low prices either. They're making some smart moves to solidify their position in the grocery market.
All right, so let's break down those winning strategies. The article we have, How Walmart is Beating Everyone in Groceries, points to a few key factors. First up, aggressive pricing.
Right? Walmart's size gives them enormous bargaining power with suppliers, which means they can get those prices way down and pass those savings on to customers. It's so effective that nearly half of their recent market share gains came from higher income households. That tells you something about the pull of those low prices, even for folks who have more spending power.
So even if people could afford to shop elsewhere, they're choosing Walmart for the deals. What else is in their playbook?
Well, they've been heavily investing in their e-commerce and delivery infrastructure. They're offering same-day delivery, which is a huge draw for busy shoppers. And they're even testing out drone deliveries in places like Texas and Florida. I mean, who wouldn't want groceries delivered by drone?
Talk about convenience. And of course, we can't forget about their private label Powerhouse, great value.
Oh,
Seriously, who hasn't stocked their pantry with those products?
it's a brilliant strategy.
Hmm.
Not only does it give them more control over pricing and supply chains, but it also builds brand loyalty. A study from 2022 found that a whopping 72% of U.S. consumers had purchased great value products. That's a massive market penetration.
All right, so aggressive pricing, convenient delivery, and their own super popular brands. It sounds like a recipe for success. But the article also mentions a potential downside to this dominance called the waterbed effect. Can you explain what that means?
Sure, it basically describes how Walmart's massive buying power can create ripples throughout the entire grocery industry. When they negotiate those bulk discounts from suppliers, it can actually put smaller independent grocers at a disadvantage. They might end up having to pay higher prices, making it harder for them to compete.
So it's almost like Walmart's size gives them a bit of an unfair advantage, even if unintentionally.
It's a complex issue, and it raises some interesting questions about economic power dynamics. But before we get too deep into that, let's shift gears and hear what former CEO Bill Simon has to say about Walmart's performance.
Right, because in that CNBC interview, he seemed pretty surprised about the recent dip in Walmart's stock price, despite their strong Q4 2025 earnings and positive projections for the future. He even called it bizarre.
What's interesting is that he sees their digital business, specifically the e-commerce and delivery investments we were just talking about, as a major growth driver. In his view, that makes the current stock valuation a great buying opportunity.
So he's basically saying that Wall Street isn't fully grasping the long-term potential of Walmart's digital strategy. And this ties directly back to their success in the grocery market, right?
Absolutely. Those online platforms and delivery services are a major reason why they're attracting so many grocery shoppers. They're combining low prices with the convenience that today's consumers demand.
Okay, let's get into the specifics of Walmart's Q4 2025 performance. We've got the earnings call, transcript, and press release right here. One thing that jumped out at me was their sales growth, which was up by a solid 5.2%. Their adjusted operating income also saw a healthy bump, increasing by 9.4% when you factor out currency fluctuations. They even had positive growth in general merchandise categories, which is pretty impressive considering the economic climate.
Hold on a second. Let me clarify what adjusted operating income and constant currency mean, because those are terms that might trip people up. Essentially, adjusted operating income is a way of looking at a company's profitability that excludes certain one-time or unusual expenses. So it gives you a clearer picture of their core operations.
Ah, so it's like removing the noise to see the real signal. What about constant currency?
That's a way of comparing financial performance across different periods, even when exchange rates have fluctuated. It helps you see how the business is doing, regardless of those currency swings.
Got it. So back to Walmart's performance, they also had a phenomenal holiday season, both in the US and in key international markets like Mexico, Canada, and China. They even announced plans for an IPO of their Indian fintech business PhonePe.
It does seem like they're firing on all cylinders, doesn't it? What really struck me were some of the comments made by Walmart's CEO, Doug McMillon, and their CFO, John David Rainey, during the earnings call.
Oh, absolutely, McMillan said, and I'm quoting here, "If I could change anything about how we're perceived today, it'd be that more people know about our breadth of assortment online and our increasing delivery speed." Rainey also chimed in, stating that their business model is delivering as it's designed to do, and highlighting their second consecutive year of strong sales and income growth.
I think those statements really highlight Walmart's confidence and their strategic focus. They're clearly committed to expanding their online presence, speeding up delivery times, and making the entire shopping experience as seamless as possible for their customers.
It's like they're not just reacting to the current economic climate, but actively shaping the future of retail.
Exactly. And that brings us to an interesting parallel. Just as Walmart is making strategic moves to solidify its position, government policies can also have a huge impact on businesses of all sizes. And that leads us to our next topic.
Okay, so how does America First fit into all of this? I'm still trying to connect the dots between Walmart's grocery empire and Trump's policies.
Well, the academic paper we have here dives deep into the long-term consequences of America First, and it does so through a global lens. It examines how these policies have affected global trade, especially for developing nations.
So it's basically arguing that America First created some pretty significant ripples in the global economy.
Precisely. The paper analyzes specific policy changes, like the tariffs that were placed on imports from certain countries.
Hold on, could you back up for a sec? What exactly are tariffs? I know I've heard the word, but I'm not sure I fully understand what they are.
Sure. Think of tariffs like taxes on imported goods. So when a country imposes tariffs, it makes those imported products more expensive for businesses and consumers in that country.
Ah, okay. So it's a way for a country to protect its own domestic industries by making foreign goods less competitive.
Exactly. Now, along with those tariffs, the paper also looks at the U.S. withdrawal from trade agreements, like the Trans-Pacific Partnership, or TPP for short.
I've heard of the TPP, but can you give us a quick rundown on what that was all about?
Well, the TPP was a major trade agreement between 12 countries in the Pacific Rim, including the U.S., Japan, and Australia. It was designed to reduce trade barriers, promote investment, and boost economic growth among those nations.
So by pulling out of the TPP, the U.S. basically stepped back from this huge international trade network.
Right, and the paper explores the consequences of that decision. It also analyzes the renegotiation of NAFTA, which was another major trade agreement between the U.S., Canada, and Mexico.
Okay, so tariffs, withdrawing from trade agreements, and renegotiating existing ones. These are all big moves with potentially big implications. What kind of impact did these policies have?
Well, that's what we'll be delving into in more detail in the next part of this deep dive. We'll explore how those America First policies affected global trade, particularly for developing nations like Sri Lanka, and how those impacts are still playing out today.
Can't wait to unpack all of that. But before we move on, I just want to quickly recap what we've covered so far. We've talked about how Walmart is absolutely crushing it in the grocery game with their aggressive pricing e-commerce investments and popular private label brands. But we also touched on the potential downsides of their dominance, like the waterbed effect that can squeeze smaller competitors.
Right, and we also got some insights from former CEO Bill Simon, who believes that Wall Street is undervaluing Walmart's digital strategy, which is a key driver of their grocery success.
And we dug into the specifics of their strong Q4 2025 performance, highlighting their healthy sales growth, operating income, and impressive holiday season.
We also started to lay the groundwork for understanding how Trump's America First policies, with moves like imposing tariffs and withdrawing from trade agreements, have shaped the global economic landscape.
So stay tuned, because in the next part, we'll be exploring how those policies have reverberated around the world and what it all means for you. All right, so before we took a pause, we were starting to unpack the impact of Trump's America First policies. You were explaining how tariffs and those trade agreement shakeups played out on the world stage. Where do we go from there?
Well, remember those tariffs we talked about, those taxes on imported goods? The paper argues that when the U.S. started slapping those tariffs on, it kind of kicked off a global trend towards protectionism. Other countries started doing the same, and it created this tit-for-tat trade war situation. Not exactly great for global stability, right?
Definitely sounds like it could create a lot of uncertainty for businesses trying to navigate those constantly shifting trade rules.
Exactly.
Yeah.
The paper points out that this America First approach actually sped up the reshaping of global supply chains.
Hmm.
Companies don't want to get caught in the crossfire of those trade disputes, so they're diversifying where they source their materials and manufacture their products. Less reliance on any single country.
Yeah, makes sense. If you're a business owner, you don't want to put all your eggs in one basket, especially if that basket is suddenly subject to unpredictable tariffs.
Now, here's another interesting point the paper brings up: the impact of macroeconomic policies. Specifically, how the appreciation of the U.S. dollar, which was partly fueled by America First, created challenges for emerging markets.
I'm still wrapping my head around how a strong dollar actually hurts other countries. Can you break that down a bit more?
Of course. Think about it this way. When the U.S. dollar is strong, it's like everything priced in dollars suddenly becomes more expensive for people using other currencies. So for countries that rely heavily on exporting goods to the U.S., their products become less competitive because American buyers have to shell out more.
Ah, so it's like their stuff is suddenly on sale for everyone except Americans. I get it.
And to make matters worse, a lot of countries hold debt that's denominated in U.S. dollars. So when the dollar gets stronger, that debt becomes harder to repay because they effectively owe more in their local currency.
Wow, so it's like a double whammy.
Hmm.
Their exports become less competitive and their debt gets more expensive. Not a good combination.
Not at all. And the paper doesn't shy away from the social consequences either. It argues that America First contributed to rising income inequality within the U.S. itself.
Interesting. I thought the idea behind those tax cuts was to boost the economy and benefit everyone. How does that lead to inequality?
That was the stated goal for sure. But the paper cites research showing that the benefits of those tax cuts flowed disproportionately to wealthier individuals and corporations. It actually widened the gap between the rich and the poor.
Okay, so let's put this all together. We've got America First leading to increased protectionism, the reshaping of global supply chains, a strong dollar hurting emerging markets, and potentially contributing to income inequality. That's a pretty far-reaching impact.
It really is. And it goes to show that even policies that seem purely economic can have profound social and political consequences, both domestically and internationally.
It's making me think about how our choices as consumers fit into this larger picture, too. We talked about how Walmart's success hinges on meeting consumer demands for value and convenience, but that also highlights the potential drawbacks of having so much power concentrated in one company.
You're absolutely right. The waterbed effect is a prime example of that. Smaller businesses can get squeezed out when a giant like Walmart dictates the terms of the game. It raises important questions about the long-term health of the grocery industry as a whole.
You know, it's fascinating to see how these threads connect. On one hand, you've got Walmart, this massive corporation strategizing its way to dominance, and on the other, you've got developing countries like Sri Lanka grappling with the unintended consequences of policies like America First.
It's a stark reminder that we're all part of this incredibly complex, interconnected system. Decisions made on a global scale, whether by governments or corporations, can have ripple effects that touch lives and economies in ways we might not even realize.
And that brings us back to those developing nations you mentioned. We touched on how America First impacted global trade in general, but how did it affect a country like Sri Lanka specifically?
That's where the paper gets really interesting. Remember, Sri Lanka has strong economic ties to multiple global powers, the U.S., China, and regional players in South Asia, so they felt the impact of Trump's policies both directly and indirectly.
All right, so walk me through those impacts. What happened in Sri Lanka as a result of America First?
Well, one of their key export industries is textiles and apparel. They do a lot of business with the U.S. But those protectionist measures we talked about, especially those tariffs, made it harder for them to compete in the American market.
So basically, those tariffs added extra costs to their products, making them more expensive for American buyers.
Exactly. And since the U.S. is one of Sri Lanka's biggest trading partners, that had a significant knock-on effect on their overall economy.
Like a domino effect. U.S. policy changes. Sri Lanka's exports suffer. What else happened?
They also saw a decline in foreign direct investment, or FDI, from the U.S. That's basically when companies invest in businesses or assets in another country. That drop in FDI further hampered their economic growth.
So less money flowing into their economy. Ouch. Anything else?
Then there was the indirect impact of the U.S.-China trade war. Sri Lanka is also a key player in regional trade networks that are heavily influenced by China. So when the U.S. and China started going back and forth with those tariffs, it disrupted those regional trade flows.
So they were caught in the crossfire, even though they weren't directly involved in the trade war itself.
Precisely. It created a lot of uncertainty and instability for Sri Lanka.
It's amazing how one country's actions can create these chain reactions across the globe.
And it doesn't stop there. Remember how we talked about the dollar appreciating in value? Well, that put a huge strain on Sri Lanka's debt burden because a lot of their external debt is denominated in U.S. dollars.
Hold on, so a stronger dollar actually made their debt more expensive to repay. How does that work?
It's a bit complicated. But essentially, yes. When the dollar gets stronger relative to their local currency, they need more of their own currency to pay back the same amount of U.S. dollar debt. It's like the goalposts moved further away while they were playing the game.
They were hit with this double whammy of reduced export earnings and higher debt costs. That's rough.
It created a perfect storm of economic vulnerability, forcing them to rely more heavily on Chinese financing, which, as you can imagine, has its own set of geopolitical implications.
It's really eye-opening to see how interconnected everything is. Decisions made in Washington can ripple out and affect the lives of farmers and factory workers in Sri Lanka. It really makes you think about the responsibility that comes with economic power, both on a national and a corporate level.
You hit the nail on the head. And that brings us to a crucial question. In a world where everything is so intertwined, how can individuals and businesses navigate this complex web of economic forces, government policies, and evolving consumer behavior?
That's a question worth pondering. And I think it's one we'll continue to explore as we move into the final part of this deep dive. But before we do, I'd love to hear your thoughts. What are some of the key takeaways you want our listeners to walk away with from this conversation?
It's funny, I used to think of grocery shopping as just another chore. But after diving into all this research, it feels like a much bigger deal now. Like my choices at the supermarket actually matter in this whole global economic puzzle.
I completely agree. Every dollar we spend is essentially a vote for the kind of marketplace we want to support. And as we've seen, those choices can have ripple effects that reach far beyond our own neighborhoods.
So where do we go from here? We've uncovered some pretty complex stuff, and I'm still processing it all. What are the key takeaways you want listeners to walk away with from this deep dive?
I think the biggest one is recognizing just how interconnected the global economy truly is. Whether we realize it or not, our daily lives are intertwined with the decisions made by governments and corporations on a global scale. And those decisions can have both positive and negative consequences, as we've seen with the whole America First saga.
Exactly. It's not about pointing fingers or taking sides, but rather about understanding the complexities and nuances of those policies and how they ripple outward.
We've also seen the power of consumer choice. Walmart's success is a testament to their ability to meet consumer demands for value and convenience, but it also highlights the potential downsides of concentrated market power.
The waterbed effect really drives that point home. Smaller businesses can get squeezed out when a giant like Walmart gains too much influence. It makes you wonder about the long-term sustainability of that kind of model.
It raises some serious questions about how we can create a more balanced and equitable marketplace, one that supports businesses of all sizes while ensuring that consumers have access to a diverse range of choices.
Absolutely. It's not about demonizing Walmart or any other successful corporation. It's about advocating for policies that create a level playing field and promote healthy competition.
So what can we do as individuals? We can't exactly rewrite global trade agreements or control currency fluctuations, but we can make informed choices about where we shop and how we spend our money.
Right. And we can engage in the political process. We can vote for leaders who prioritize policies that promote economic fairness and sustainability. We can contact our representatives and make our voices heard on these issues.
We can also support local businesses and farmers markets that helps to build more resilient and diverse local economies. It's about taking action both big and small to shape the kind of world we want to live in.
And recognizing that even seemingly mundane acts like grocery shopping can have an impact on the global stage.
Exactly. It's about seeing those connections and understanding that our choices have power.
So the next time you find yourself wandering the aisles of your local grocery store, think about the bigger picture.
Right.
You're not just filling your fridge. You're participating in a complex and interconnected system that touches lives and economies around the world.
Wow, that's a powerful thought to leave us with. It definitely changes the way I think about my next grocery run.
It's been a pleasure diving into these topics with you today.
And to our listeners, thanks for joining us on this journey of discovery. Until next time, stay curious and keep exploring.